Hi, I'm Dr. Drew and welcome to my YouTube channel. This is a channel not on medicine, but on all the other aspects needed to live our medicine lives. Today, we're going to be talking about the S&P 500, the infamous S&P 500, what it is, why it's important to know, and how I suppose we could use it to build wealth, which is the most common way advocated in our current society. And so the S&P 500, or Standard & Poor's 500, is an index that tracks the performance of 500 large cap stocks that are listed on the New York Stock Exchange or the NASDAQ. Now, if you don't know what large cap stocks are, don't worry, we'll be covering future videos on what is a stock and how they're classified. And so one of the classifications they use is small, mid, and large cap. And so large cap is one of the classifications. It's considered to be a broad market indicator, meaning that it reflects the overall performance of the stock market. The stocks included in the S&P 500 are chosen based on something called market capitalization and liquidity, and they represent a diverse range of industries and sectors. And so why is it important to know about the S&P 500? Well, it's important for us to know because the S&P 500 provides a good indication of the overall health of the stock market and is generally listed as the benchmark index fund when your portfolio is designed. So when your portfolio is created, it is essentially judged against a benchmark, which the S&P 500 index, which has a long track record or track history of the last 100 years, and we have data on that, is used to make projections into the future. Now, past performance is not an indicator of future performance. However, it's generally used in the industry to judge the performance of other portfolios and even the S&P 500 itself. If the S&P 500 is performing well, it's likely that the stock market as a whole is performing well. If it is performing better than the S&P 500, it's considered to be outperforming the market. And if it's performing worse, then it's considered to be underperforming the market. So when you hear the terms overperforming or underperforming the market, what they mean is that the S&P 500 is underperforming against that. Now, generally, depending on who you talk to, the S&P 500 has been traditionally growing at 6 or 7% of compound annual growth rate, which is the after inflation compound growth rate, because the number that you hear commonly is that the S&P 500 grows at 9% or 10%. That's the average growth rate of the S&P 500. Now, if you don't know the difference between the average growth rate and the compound annual growth rate, go back in the previous videos and check out that video where I tried to explain the difference between the two. It is very important that we understand how what numbers are being used and how these are calculated if we're going to use the compound growth rate versus the average growth rate, because they're both very different and the numbers are different. 9% obviously in our mind seems bigger, but that's the average growth rate. It may not be exactly, if you were to use that in your compound interest calculator, you will be, I suppose, disappointed. So I have a few calculators where I have seen the last 60 years of the S&P 500 and determined why the average growth rate is different from the compound annual growth rate. But generally, you can look at like 7%, put it in your calculator and see that it compounds at that rate. Now, it's no guarantee, but that's generally what the benchmark is stated as. And so how do we use the S&P 500 index? Well, as we talked about, a lot of passive index brokers out there, Vanguard, Fidelity, Schwab, have tools available either publicly or when you sign on to their brokerage, and you can use the S&P 500 index, which is called the SPY in the US, or VFV is the Vanguard Index Fund in Canada, or you could buy the S&P 500, which is Canadian hedged for the currency. And so there's various ways of you buying a ticker that goes to the S&P 500. But essentially, once you're able to understand that benchmark, you can start monitoring its performance over time. And you can also see how different sectors and industries within the S&P 500 are performing. You can compare the performance of your own investments to the performance of the S&P 500 to see how they're doing relative to the market. And generally, we'll talk about in the other videos, 90% of fund managers don't beat the S&P 500. that's 5 minutes. So, in conclusion, the S&P 500 is a widely followed index that tracks the performance of 500 large cap stocks and provides a good indication of the overall health of the stock market. Most fund managers don't beat the market, so you can't but very rarely do we overperform the market. But having said that, there are fund managers, just like physicians and lawyers and accountants, who always excel in their field. There are fund managers who excel in their field and do beat the market. But 90% of them, or anywhere between 60 to 90%, depending on which study you're reading, the vast majority of them don't beat the market. So the S&P 500 serves as a good indicator. It can provide insight into the stock market as a whole and can be used as a benchmark for your investments. You can use your brokerage to understand how the S&P 500 performs, and then also the benchmark can be used to judge your own investments. And factors such as the overall economic climate, interest rates, and political events do have an impact on the stock market. And so on that note, hopefully this serves as a summary in a world filled with information but not succinctness. So a few action items. If you'd like to follow the exact frameworks used by affluent physicians to take back control of their time and money, then use the links in the description below. I make these videos because I'm passionate about fighting burnout in 10,000 physicians across the world, and I had hoped that someone would hold my hand through this. I found a lot of mentors along the way, and now I'm passing on that information on to others for free. Come and join my Facebook group of like-minded physicians, where we share resources, calculators, and everything in between to live our best medicine lives. So on that note, thank you very much for listening. Don't forget to share, like, and subscribe. Thank you for taking care of your patients, and I'll see you in the next episode.